The old school mentality used to be 20%, right? You have to save 20%. Well, nowadays, especially in the year 2023 going into 2024, there are programs out there as first-time homebuyers that will put down as little as 3% conventionally, 3.5% FHA. As a veteran, you can put down zero. You qualify for a zero down. As long as you can prove that you're a veteran.
That's correct. That's
Right?
correct.
And then every other type of loan. You're going to hear a lot of new banks coming out there, 1% down payment, or they can give you something. There's a lot of things out there. What you need to do, sit and have a conversation with the loan officer, explain your situation so they can find the right product for you. Right? Make sense?
Correct. There's something that's always in the back of everybody's mind, and I get asked that question many times. So how do I get to lock my house? Let's say somebody comes in, they see a house they like, then they get their equal, and they want to lock their rate. Let's say the interest is coming down now, they want to lock their rate. Do you guys do that?
It's an ability that we have, but the question would be is how long you lock the rate in that. When are you buying the home? Do you even know the home that you're buying? You can't just be like, hey, I want to buy a house in 2024, I want to lock it for a year. No, the rates are lower. You know, banks really only extend locks for about 120 days max. Like 90 is long, 120 is max. But what the bank is doing is guaranteeing you the rate. But they're taking the risk, right, by locking that. So what happens if the rates keep going lower? What are you going to do as an owner?
Mm-hmm.
You're going to jump ship on that bank,
yep.
right?
That's right. That's
So let's say you locked it at 3 weeks ago, 4 weeks ago, 8.375. You locked it, you jumped in there, boom, great, rates at 7% better. What are you doing? You're leaving that bank, you're walking away from them. So your timing of what your plans are very, very important. You really don't want to put ways with banks. Okay, you don't want all your information in here and there and over here and bouncing around and jumping from one bank to another bank. As a broker, we have the ability to move around very easily, where as you as an individual would have to go from one bank to the next location and do all that. But from the aspect of what you're asking, locks are available. It's all about timing. Because here in New York, we're not like other states. We have what's called an on or about date, which is the silliest thing personally. So what's an on or about date? Let's say you signed a contract today, guy. Today is December, whatever. Okay? And that contract is signed and you say on or about February 1st. Okay? Well, that's an on or about date. By law in New York, that's 30 more days after that, and we can possibly go. And then we got to issue what's called a time is of the essence, the attorney, so it could go another week or 2 weeks. But there's no time frame. So you starting now without even finding a home, what's your lock going to do if they give you an on or about date of March? It's past your lock period. So it's all about how fast you're looking to do. Is that seller willing to get out of the house? If they have to find their own house. Are they buying their own home? Because what happens with a lot of people out there, when you're buying their house, they're pretty much probably selling it to you and trying to buy their own.
That's correct.
But what happens if they got slowed down with their house that they're buying? Can they sell you your house? Are they going to leave and be vacant and not have anywhere to live? No. They're going to slow our process down because they didn't buy their house yet. So not knowing all of this and trying to lock a rate in really early, yes, it can behoove you a little bit, but it can really hurt you. Now,
Appreciate that. What about one question that comes up is always about closing costs. Is that something we can attack now?
I can answer the question I can do it as an average though. I can't do it as a specific closing.
Of course.
And here's why. Okay, I'm still using New York and the borrowers and stuff as an example. If you were to buy a house in Queens, or to buy the borrowers go to Westchester, Staten Island, you're going to get taxed at a different property tax rate than you are in Long Island and Nassau and Suffolk County. In general, Nassau and Suffolk County are 0.8%, while Queens and five boroughs are 1.8%. So if you would buy a home for $800,000 on Long Island, you're getting charged $6,400 in tax. Not property tax, but in transfer taxes to actually buy the property. If you bought that same house in Queens, you get times that by 1.8%. You're $8,000 more. right? But it's say $800,000 home, so your closing
Correct.
costs have just changed. 1 full percentage point already by the town you're buying or where you're buying. But on average, you can look between 4 to 5% of what your purchase price is at closing cost. And inside, built into that, is what's your escrow. That's your taxes and insurance, that's how you count to do the bank. Eventually, you have the option to choose the escrow. FHA, you don't have that option. It's forced place. So that means the bank has to take money up front from you, hold it at closing, to be able to pay your property taxes and all of it. So when I'm saying closing costs, it's including your own monthly account.
Correct, correct. Okay.
All right. Thank you very much,
So-
guys, for having me.
Well, Nick, I really appreciate it, and I know the viewers out there, they really gonna appreciate that, because that has been something that is lacking, because people keep hearing so many different things. And it's amazing when you talk to home buyers, you realize most of them don't have a clue as to what's going on in terms of mortgage. And you mentioned it in passing too, that everybody's on the internet, they're reading things, and sometimes they don't even know who is the person, writing these things, and how accurate the information is.
Yeah, I'm gonna actually add one last piece to that.
Sure.
This is not the time where what you read is what's the truth. By the time you've read something, it's already changed. The small people will not that. It doesn't matter really what it was that your uncle, your cousin, your sister-in-law, your brother-in-law bought a house last year, 5 years ago, even 4 months ago. It's a different world. But the banks are like to change. And they're making sure that they're positioning themselves for the future, not putting in those type of things. So please understand what work you do or what work your family member or what they did doesn't affect you. You are your own independent person, and your qualifications are the only thing that matters. It's not about what other people have done, what other people can do. It's about you. Your income, your assets, your foundation, your family. Because you're the one paying for it. And just be aware that speak to someone straightforward and honestly, may it be me or anybody, and they'll make sure they position you the right way, do the right thing.
Great.
Thank you, guys.
Thank you very much. It was a pleasure.
Pleasure.
Okay.